Have you ever wondered what Bitcoin halving is and how you can benefit from it? Today, we're going to unravel this enigma. We'll explore the fascinating concept of Bitcoin halving, dissect its intricacies, and highlight how it impacts the world of cryptocurrency. Throughout this journey, we'll also shed light on how you could leverage Bitcoin halving to potentially turn a profit. So, are you ready to dive into this captivating topic? Stay tuned as we delve into the intriguing world of Bitcoin halving. Before understanding Bitcoin halving, we need to understand Bitcoin itself. Bitcoin is a type of digital currency, the first of its kind, launched back in 2009. It was conceived by an enigmatic figure known as Satoshi Nakamoto, whose true identity remains a mystery. Bitcoin's purpose? To create a decentralized form of money not controlled by any government, bank, or organization. Now, Bitcoins aren't just floating around in the digital ether waiting to be picked up. They are generated through a complex process known as mining. In essence, mining involves computers solving intricate mathematical problems. The first to crack these problems is rewarded with newly minted bitcoins. This process not only creates new bitcoins but also verifies and records all Bitcoin transactions on a public ledger known as the blockchain. Now that we understand Bitcoin, let's explore the mysterious event known as Bitcoin halving. Bitcoin halving, a term that sparks curiosity, but what exactly is it? You see, Bitcoin operates on a model of deflation. Unlike traditional money which can be printed by central banks as needed, Bitcoin has a fixed supply of 21 million coins. This scarcity is part of what gives Bitcoin value. To control the release of these coins into the market, Bitcoin uses a process called halving. This event occurs approximately every 4 years, or more specifically, every 210,000 blocks of transactions. It's like a heartbeat keeping the rhythm of the Bitcoin ecosystem. So, what happens during a Bitcoin halving? Well, the reward for miners who validate transactions and add them to the blockchain gets cut in half. At Bitcoin's inception, the reward was 50 coins per block. After the first halving in 2012, this dropped to 25. The most recent halving in 2020 brought it down to 6.25 bitcoins. Reducing the reward means fewer new bitcoins are generated and distributed. This slows down the rate at which new coins enter circulation, a deliberate design to preserve Bitcoin's value against the risk of inflation. But the halving process also increases the cost of mining. As the reward decreases, miners need more computational power to earn the same number of bitcoins. This could lead some miners to quit, reducing the network's computational power and potentially increasing transaction times. Now you may be wondering, what happens when all 21 million bitcoins have been mined? Well, the simple answer is, we don't know for certain. The final coin is projected to be mined around the year 2140, so we have some time to figure it out. In the meantime, the halving events serve as significant milestones in the lifespan of Bitcoin. They create a hype that often leads to a surge in Bitcoin's price, attracting new investors and further securing Bitcoin's position in the market. Understanding the Bitcoin halving process is key to unlocking potential profits. Bitcoin halving has a profound impact on the Bitcoin market, but how? Let's dive into the implications of this event and its ripple effects across the landscape of digital currency. Firstly, Bitcoin halving directly affects Bitcoin's price. This is due to the basic principles of supply and demand. When the supply of something is decreased and the demand remains the same or increases, the price naturally goes up. That's economics 101 for you. In the case of Bitcoin, when halving occurs, the reward for mining new blocks is halved, effectively reducing the rate at which new bitcoins are created. This decreased supply often leads to an increased price of Bitcoin. Next, let's consider the mining community. Bitcoin halving impacts miners as their reward for mining a new block is halved. Although this might seem like a negative outcome, it's not entirely so. Miners are not only compensated via block rewards but also through transaction fees. As the price of Bitcoin increases post-halving, the value of transaction fees can also increase, potentially offsetting the reduced block rewards. However, it's not all smooth sailing for miners. The increased cost of mining due to the halved reward can push some miners out of the market, especially those with less efficient mining hardware. This can lead to a temporary decrease in the network's hash rate, or computing power, until the less efficient miners are replaced by more efficient ones. Finally, the overall market is affected by Bitcoin halving. The anticipation of the halving event often leads to increased public interest in Bitcoin, which can drive up the price even before the halving occurs. This speculative nature of the market can lead to price volatility, providing opportunities for savvy investors to profit. As you can see, Bitcoin halving can shake up the market. But how can you take advantage of this? Stay tuned as we explore ways to profit from Bitcoin halving in our next segment. Bitcoin halving presents a unique opportunity for savvy investors. Here's how you can be one of them. As we've seen, Bitcoin halving has a significant impact on Bitcoin's value. But how do you convert this knowledge into profit? Let's delve into some strategies. The first and most straightforward strategy is long-term investment. This is a buy and hold plan where you purchase Bitcoin before a halving event and hold on to it for an extended period until its value increases. The idea here is that the reduced supply of Bitcoin after halving will eventually lead to increased demand, pushing up the price. But remember, this is not a quick cash grab, it's a long-term commitment. The second strategy is trading. This involves buying and selling Bitcoin based on short-term price fluctuations. Traders often use technical analysis to predict these price movements. With the right skills, traders can profit from the volatility that often follows a halving event. However, trading is risky and requires a significant amount of knowledge and experience. It's not for the faint-hearted. Both strategies require careful research and informed decision-making. It's crucial to stay updated on Bitcoin news and understand the broader economic context. For instance, what's happening in the global economy? Are there any regulatory changes on the horizon that could impact Bitcoin? In summary, Bitcoin halving offers an opportunity to profit, but it's not a guaranteed win. It's a game of strategy and patience. You need to understand the market dynamics, have a clear plan, and be prepared to stick with it. Remember, investing in Bitcoin, like any other investment, involves risk. It's important to only invest what you can afford to lose. And as always, diversification is key. Don't put all your eggs in one basket. With the right knowledge and strategy, you can turn Bitcoin halving to your advantage. So we've covered a lot today about Bitcoin halving. We've taken a journey through the fundamentals of Bitcoin, a revolutionary digital currency that operates on a decentralized peer-to-peer network. We've learned about the intricacies of Bitcoin mining and the role it plays in maintaining the integrity of the blockchain. We then delved into the concept of Bitcoin halving, a pre-programmed event that slashes the rewards for Bitcoin mining in half every 4 years. This halving event, in essence, reduces the supply of new Bitcoins entering the market, making the existing ones more valuable. We also explored the impact of Bitcoin halving. It's not just a technical event, but a market phenomenon that can trigger price rallies and increased investor interest. We've seen this play out in the past, with significant price surges following each halving event. And finally, we've discussed profiting from Bitcoin halving. The key is anticipation and strategic investment. By understanding the cycle, investors can position themselves ahead of the halving event to potentially reap benefits from the subsequent price rally. But let's not forget, as with any investment, there's always a degree of risk involved. Thorough research, informed decision-making, and a well-diversified portfolio are essential to mitigate these risks. Remember, knowledge is power in the world of cryptocurrency. Keep exploring, keep learning, and you may just find your fortune in the next Bitcoin halving.